A couple of weeks ago, we did a video introducing Dropbox's Spaces 2.0, the beta version that I was invited into, taking a look at it to see if it'll be one of those key features that will separate Dropbox from all of the other cloud storage companies. We also asked the question, who would be interested in buying Dropbox or acquiring Dropbox? We had some good discussion down in the comment section, and we also have seen some really good price action since then. So today I'm gonna share the idea that I came up with too. Welcome back to the channel, family. My name is Trey, getting in touch with you from Japan. On our primary channel here, we typically look at individual stocks, but over on our secondary channel, we look at small business, entrepreneurship, mindset. We just released a video on chapter 5 of how we took $200 and turned it into $1 million through small business here in Japan, and also a supplementary video on how much my $20,000 cars cost me, looking back 17 years later. If you're new to the channel, welcome, and if this is the first video you're seeing with us, we've been following Dropbox for a little while now. In the first couple of videos, I didn't really recommend it, and sure enough, the stock price just sailed along at like 18 bucks for a little while after that. A couple videos ago, we started to see their ARPUs going up, average revenue per user, and we also started to see growing operating incomes, growing margins, as well as a variety of new services, and that's when I switched kind of my recommendation for myself, not for you. Don't listen to anything I say. I'm just a guy talking on YouTube. I'm not your advisor. And I said, I'm gonna buy Dropbox now. So I did, and since then it's been doing really well. Not to say I'm really good at timing the market or something like that, because if anything, I recommend not trying to time the market. If you believe in the long-term vision of a company, get in, keep buying slowly, and over the years, it will do you well. Yesterday alone, Dropbox was up about 5%, which is really good to see, and it seems like the greater overall market is starting to realize how undervalued this stock can be, and we're also hearing more and more buzz about a potential partnership, merger, or acquisition on the horizon. Check it out here. We have a HyperChart breaking down the revenue and operating income of Dropbox in the last couple of years. The last few months we've seen here, operating incomes have been doing really well, better than ever before for the company. And this final quarter was their highest operating income ever, on the back of growing revenues, as well as growing users and average daily user rates as well. And sliding down to another HyperChart, here we have margins, with the yellow as gross margins and the red as operating margins. We're seeing both of them trending up nice. Gross margins, almost 75%, 74, 75, 76, 77, 78, 78.8 in the last quarter. And those are trends that you like to see, especially in companies that are this basically ignored by the market as a whole. And so we've been seeing Dropbox growing really well. So I asked you guys, who do you think might pick them up? And so we had a bunch of responses from you guys. Check it out. We had somebody recommending CRM, which is Salesforce, or SAP, SAP. Another guy, Microsoft. Another guy said Oracle or ServiceNow. Again, SAP, Salesforce, or DocuSign. We had a bunch of different suggestions from people. I think we also saw Amazon, interestingly. There are a lot of players who already are in the cloud storage industry, but could benefit from, the diversification, well, not only the diversification, but also the huge user base that Dropbox already has access to, which is more than 600 million people. If you're unfamiliar with SAP, it's a big multinational German software as a service company, SaaS company, with a market cap of more than 150 billion bucks. I've not looked into SAP a lot, but some of the comments were saying that they're kind of like losing their edge, and maybe picking up somebody like Dropbox could help them reach a whole new area of clients. But in between all these different recommendations, I was kind of surprised we didn't hear any suggestions on Zoom. Zoom has already been integrated with Dropbox. They put together a little video here showing you the benefits of using these two services together. So check that out.
Dropbox and Zoom are making it easier for teams to collaborate on their most important work in real time. With the Dropbox and Zoom integration, you don't need to jump between apps anymore. Using your web browser or the new desktop app, just connect your calendar and you can join Zoom meetings right from Dropbox. Swimming in a sea of comments and feedback? Start a quick Zoom meeting with your team to get clarity, make decisions, and move things forward.
Oh, hi everyone.
And when you meet on Zoom, all of your important files are at your fingertips. Simply select Present in Zoom and share files with your team at the tap of a button. So no more pausing conversation while you wade through documents. And no more asking where that spreadsheet went, ever again. again.
Talk to you tomorrow.
Take the guesswork out of action items and next steps. With Zoom, you can record your video meetings and save them to Dropbox, so anyone working on the project can re-watch the conversations or even search the meeting transcript for the info they need. And those files you shared, they show up in the Dropbox activity feed automatically, so your team has easy access to them. Now everyone can be in the loop, even if they can't be in the Zoom meeting. By combining Zoom's powerful communication features with collaboration on Dropbox, projects move faster and teams come together. Try it today.
So as the video mentioned, we've seen that Zoom and Dropbox have set up really clean and tight integration that makes working from home, the trendy thing this year, much easier. One of Dropbox's strengths is indeed integration with a bunch of different apps like Slack and things like that. And so Dropbox has been growing, and Dropbox is also probably the easiest one to use regardless of platform or operating system and things like that. And so Dropbox as a storage option has continued to grow in popularity, but they've been having trouble converting people into big time paying customers. Zoom, on the other hand, if you're not familiar with Zoom, I'm going to break down a little bit about who they are, some of their figures and finances and stuff like that. If you already know about them, feel free to use the timestamps down below to skip ahead. But yeah, as we're already seeing from that video just now, Zoom and Dropbox work really well together. And taking a step back and looking at their finances, also where Zoom is positioned in the market right now, and how they're starting to branch out into like phones and other different kinds of services, it kind of feels like they might be willing to step up against bigger players like Microsoft, who already have a bunch of these other offerings on the plate, but they charge way more money and have much smaller user bases too. Zoom is like a mind-blowing company. You've probably heard about it. You probably use it every day, actually. In this article from Tech Republic, they highlighted the fact that users on Zoom went from 10 million in October of 2019 to 300 million in October of 2020. That's like unprecedented growth speed, I think, even for tech companies. And obviously that's all been aided by the pandemic and shifting to working at home and stuff like that. And that's not 300 million users altogether, that's 300 million daily active users. So people who are using it every single day. That's an insanely huge user base. They also highlighted the fact that Google Meets figures hover around 100 million participants logging into meetings every day. So if you have a platform that's being used 3 times more than anything offered by Google, you're doing pretty good for yourself. And on the back of all that team working capability, they're also starting to offer more rooms and groups and, like I mentioned earlier, phone services that could actually end up replacing your traditional kind of phone companies like AT&T and things like that. And they're able to keep up that sterling reputation. I think we'll start to see a big transition from like legacy carriers who've been around for like 100 years over to newer offerings like this, potentially in the future. Stepping back into the HyperCharts, this is a HyperChart for Zoom. By the way, if you like HyperCharts, if these are interesting or helpful for you, please click on the link down below in the description. If you sign up to be a member, that will go ahead and support us here to keep making videos for you on this channel. Check it out, the year-over-year revenue growth, even first quarter was already 169% year-over-year revenue growth. Second quarter, 355%. And then this most recently completed quarter, 366% year-over-year revenue growth. Beast mode much? And shifting over to the margins, check it out, we have operating margin in red, works out to, this quarter was 25% profit margin, and operating margin. And up here on the gross margins, we see a 66% margin. So we're not only seeing huge user growth, we're also seeing good margin growth. And I think that also reflects management's conservative expense controls too, especially while they're growing so quickly. And that works out to this beautiful looking net income chart here. Check it out, quarter 2, 185 million. And then this most recently completed quarter is almost 200 million, $198 million. We did see a 30% revenue beat on their third quarter earnings report, and we're starting to see price earnings, P ratios, and forward P ratios start to catch up a bit with the stock valuation. Currently, we're sitting at a 284 PE and a 136 forward PE. Not quite as nuts as when I did my last video on Zoom. Click up here if you want to check it out for a more in-depth look. But we're still seeing that a lot of investors and institutions investing in this company expect really big things from this company going forward. Zoom sits at a market cap of 115 billion and has seen some price reversal in the last couple of months, settling down to a slightly more sane $409 as of filming. In their third quarter earnings report, they also highlighted revenues up 367% year over year to 777.2 million. They also mentioned that the number of clients paying more than $100,000 in the trailing 12 months has gone up 136%. And the number of clients or companies with more than 10 employees in their account is up 485% to 433,700 clients. And so we're starting to see not only individual users growing, but small businesses. And I think that's really the key. And I think that will be one of the big differentiating factors when you compare their kind of chat services to other companies like Microsoft Teams, which seems to be more rooted in like really, really big companies. Zoom is also showing that it can be a cash flow beast. Net cash from operations is up from 61.9 million to 411.6 million year over year. And free cash flow was up from 54.7 million to 388.2 million year over year. And just for comparison, to put things in perspective, that's roughly double Dropbox's free cash flow of about 187 million. Zoom's cash and cash equivalent sits at about 1.9 billion, which actually isn't that much further ahead than Dropbox's, which sits at about 1.22, I believe. So you might be asking, like, dude, these figures aren't all that different from Dropbox's figures. Like, it's not like they're 100 times bigger than Dropbox and they can just easily devour them. But the really interesting difference comes in the way the market values these companies. So we're not seeing massively different cash flows. We are seeing faster growth from Zoom, obviously, but the way the world and the way the market values these companies actually gives them really different market caps. And so Zoom's market cap is now sitting at about 115 billion, whereas Dropbox's is only 10 billion. So the way investors have driven up the stock price of Zoom basically is saying Zoom is worth more than 11 times Dropbox. Do you think that's fair to say based on these figures like their cash flow and their cash position and all these different things that I just mentioned? It shouldn't be this way. But it's because people factor in future growth and a lot of other factors like that when they're willing to start paying for stocks. And Zoom has just been one of those stocks that's like, yeah, what's Zoom? I don't know what you're talking about. All of a sudden, like a month later, like every company, every school, every organization that does anything over the internet is like, you don't have a say in the matter. Get Zoom now. We're having a Zoom meeting with all 30 of our staff. Shut up, kind of thing. And that forced adoption to go super bonkers, so much so that everybody was just like, oh my gosh, I gotta get Zoom, I gotta get Zoom. The price doesn't matter, I don't care. A growing company equals a growing stock price, which isn't the correct attitude to have, by the way. So much more than the way Dropbox's stock price has been growing or just staying flat. It probably shouldn't be that the market cap is more than 11 times Dropbox, but that leaves Zoom in a position where they have a huge market cap and they look 11 times bigger than Dropbox, and they also have super complementary products that could work really well together. And if you were to combine Zoom's features and popularity with Dropbox's features and popularity, combine them and just make them one thing that works really easily. And actually, I should mention this too, not a lot of people are willing to pay for Dropbox's service, but like a lot of people are willing to pay for Zoom's services. And providing that value add for Zoom users could, in a sense, monetize something that has been unmonetizable for Dropbox so far. Thinking about some of the competition like Cisco WebEx or Microsoft Teams, I think an acquisition and a partnership like this for Zoom could step them up into like a whole other realm of the market, really going up to bat against the big boys like Cisco and Microsoft. I don't think they offer quite as like holistic of a team working system as either of these other two systems do at the moment, but it could catapult them into being a much bigger player going forward into the future. What do you guys think about this? Another thing I wanted to mention, unfortunately, was while I was putting together this video, I found an article, but it was behind a paywall, so I couldn't look at it. I think it was talking about a similar thing, like Zoom might be able to pick up Dropbox or something like that. So I don't know what that article says. If you've read it, let me know down below if it contradicts or supports what I'm thinking, what I'm talking about. Also, really interested to hear what your thoughts are about this whole matter. Thank you guys very much for your time and for your comments. Also, I wanted to wish you guys a Merry Christmas, Happy Hanukkah, Happy Kwanzaa, Happy New Year's, and whatever you guys celebrate, keep safe, keep healthy, and I love you guys and talk to you soon.